So, hello, and a massive hello to everybody. How are we all doing? Rocking and rolling in a free world. Hope everybody's having a great day. It's 50 pips, rocking and rolling 9th of October 2019. No trade calls, recommendations, or response for their own stuff because we're here for educational purpose only. So, what's happening? It's even more of a waiting game than usual, right? So, we've got a lot of wheeling and dealing across the board. Today should be an interesting day because we've got Powell speaking again, and we've got the FOMC minutes coming out. And tomorrow we've got the ECB minutes coming out, so that's going to be interesting. And we still have more data and more central bankers speaking, but really it's all and only about the trade talks on Thursday, Friday, right? So there's a lot of wheeling and dealing here. Both sides are posturing. There's a lot of talk of U.S. wanting only a big deal, China wanting a mini deal. Now there's talk about China might be leaving Thursday early ahead of the Friday deadline, which the market will definitely not like. So it's hard to really know what's going to happen. Basically is they walk out, no deal, ugly, market probably down 3 to 5%. Super deal, market probably up 5+%. And a mini deal, there's a good chance the market will be up something like 3% or so. So that's what would be our base case. What's important to understand is though, and I know a lot of people have trouble with this, and I highlighted this, as long as we're inside the 50 DMA, so this is SPX, right? And inside the 200 DMA, usually we know that these are what we consider chop zones, right? What do I always say? I say, do not be confused by the velocity of move inside range. So what does that mean? That means that the market can move very quick inside this 50 and 200 DMA, and people can make money, people can lose money. But for the bigger picture view, it doesn't mean anything, right? For something substantial to happen, we need a daily close above this level or a daily close below, which will be uber bullish to the upside and fairly uber bearish to the downside. So these are areas where traders tend to get chopped up a lot because they try and trade tight inside range, or they think that any kind of move inside this range really means something, whereas it doesn't. It's inside the range. It can move very aggressively. Your best bet is to be tactical if you want to trade inside the range, number one. Number two, if you are long, as long as position long, longer term, right? As long as you don't get a daily close below the 200 DMA, you're still long. You can't. There's no reason to really change your outlook, right? If you're short off that negative close here at the 50 DMA, unless you get a daily close back above here, right, you're short. There's nothing much to say. And that's why also you usually get a lot of chop and a lot of velocity inside the range. Why? Because all the big money, right? All the big money, are short, stops above here. They're not going to change their mind. Or long stops below here. So that means that inside here, no big money is really going to change hand unless it's on a headline, right? It's just smaller accounts, smaller transactions. It's not big positions trade. The people who need to who had to make their bed already made it. Okay, I hope this is important. It's clear because it's a very important concept. If it's not, send me an email. I'll try and do another video on it. Now, the other thing that changed is that Powell came out and talked about, is it QE? Is it not QE? Essentially they're expanding the balance sheet. So it's supportive, right? And one thing which I wanted to highlight, and this is a really good tweet we got here, is just to make sure, because people were wondering, what does this mean for bonds, right? Well, essentially it may be counterintuitive, but really, right, if you look at here, US 10-year yields during QE periods, right, in December 2008 to 2010, yield starts here. The next round, see what's happening here, right? So what does that mean? A higher yield, right, means that bonds are going down, right? So a lot of people think it's bullish for bonds. It's not actually, okay? So this is something which is going to be very, very interesting, and we'll have to keep an eye out for here. But here it makes a lot more sense to even though it may seem a counterintuitive trade, is to be positioned short on the bonds, right? So if we take the 10 years, so we look at, actually let's look at it a different way. 10-year yield. There we go. This is something which we've been discussing in the weekly webinars too, right? Our expectation is that bond yields are trying to put in a bottom here, and that we'll ultimately see this try and reverse back into the 2 mark, right? And if you look at in the way, right, you can see here that usually this means that yields have increased, right? This is in line with one of the trades we've been looking at in the weekly webinars. And our base case assumption is that here we've put in a short-term bottom, and we're going to try and move back into the 2% mark, okay? So what does this mean if you're trading the ZNs, right, which is the 10-year on the futures contract, is that this base case assumption is that this is a top that's been in, and we would be looking to either already have shorts running for that to hold. As long as we don't close back above here, we expect some kind of top here, and this to try and come back down a little bit lower. And this is similar to the action you'll see on the ZBs or the UBs on anything else, right? You see how they've actually stalled here, and it's kind of stuck. And our base case is that we're going to be trying to come back a little bit down. So we'll have to see if that plays out, okay? So that's really the big development. If you look at in terms of DXY, what's happened on the DXY, not a lot is going on. Forex is just kind of in coma, right? Trying to digest what's happening on the with this trade war. So we'll have to be patient again. Our base case is still that even though you could see a little bit of strength here on the dollar index, we expect to see 90. Let me make it a little bit as simple as possible. Expect to see 98 print before we see 100 print. Okay, that's the way I'm looking at it. Another topping process here for a move back into 98. And right here, I've only taken, I don't usually talk about tactical trades, but let's do it here because it's a little bit slow. Today, I've traded a long on cable this morning, very tactical trade. And what I'm looking at is a sloppy hold of this low right here, which is essentially a 61.8 of this move from A to B, right? And ideally what you want here is to see this get back above the 50 DMA. Ideally, you want to see a headline hit. So this ultimately holds and we see this play all the way back up into the 128, okay? And if you look at this on a shorter time frame, like let's say a 15-minute, to give you an idea of the action, is you see what's happening is it's basing around this level. And I was discussing with some of the guys, this is an example of a tactical trade where you have, it's a lower odds trade, but you have a high payout. Okay, what does that mean, right? Is so everybody's always obsessed about trading a 1 to 2, 1 to 3, 1 to 5 risk reward. Because of course, if you're trading a very high risk reward, you can be right even only 15, 20% of the time, and on balance, you'll make money, right? But you could also trade strategies where you have very low odds, but a super high payout, right? So what this means here on the trades this morning, you see how it was basing in the, essentially 122.05-ish area, right? And these lows here are just below the round number, right? basically at the 95s. So it means that aggressive longs into the morning here, essentially, you're only risking, depending on where you're trading this, you're risking, say, 10 to 15 pips. Now, what are the chances of these 10 to 15 pips holding? You might get a headline. Well, it's probably, it looks like it's easy pickings to clip these stops. So you wouldn't go into this trade expecting to necessarily super high odds. It's not a slam dunk, right? But if you lose, you're only going to lose about 10, 15 pips on this trade, right? But if you get a headline, or if this basing pattern holds, you know that at the very least, it's going to try and clip stops above these highs. And if it clips stops above these highs, there's a lot of room to run to the upside, right? Even if you're looking at it on a 1 hour setup, you see how this whole headline, this whole move down yesterday, which was essentially on a headline, could easily reverse, and we see ourselves all the way back to the scene of the crime, right? And here, what you're talking about, if we come back into the scene of the crime, you're looking at, 80 to 90 pips for that 10, 15 pip risk. That's a very nice trade. But look at it in terms of kind of like a lottery ticket, right? What happens on the lottery ticket? Well, what happens on the lottery ticket is that if all of a sudden we get a little bit of a headline from Brexit, or things start to look a little bit better, and we see this puppy start to pop, right? All of a sudden, even back into these levels, right? 125s, 128s, you see the risk reward is gigantic. So even though you don't really build a career, or you don't build a long-term track record on these trades, I like looking for these trades, right? So let's see if this gets traction. And again, I'm long with stop below those lows. I'm just trying to manage it. I'll take in now. I think I have to check. I think I just got hit for my TP 50% off, and now I'm just gonna let it ride, right? I don't care what happens. Either it comes back and it takes me out at BE, I got a free lottery ticket, or it just rips and I get paid on the lottery ticket. Okay. Now the other thing here in terms of that you can look at in terms of the DXY is a lot of people asking me about yen, right? And here, this is going to be, again, a barometer of risk on, risk off, and what equities will do, right? Here, what you will see is, as long as yen holds this 107, broadly speaking, and we get close here, this could easily be also trying to coil for that move back into the 200 DMA. And I also like this trade as an aggressive trade, looking for some kind of resolution of the trade talks and a move back higher. This is a fairly nice trade also going on there. And again, we're still sticking with our very hard, it's been a hard one, but still sticking with our long call on euro. I don't like this chart. Let me get a different chart I have up here. Basically looking at this euro to have based here into these lows. We discussed this from the other day, right? Very nice longs here. And as long as this breakup is holding, still expect this to try and move back higher, okay? So we'll have to see what's going on. Just another thing, since we're talking about some tactical trades, let me just get, and it's gonna be exactly the same what I wanted to do. On the equities, right? Here, what you can see on the equity side is, look at it on a 1 hour. Everybody is looking for disaster on the equities going into the morning, because we closed a little bit heavy. Whether you're looking at ES, whether you're looking at NASDAQ, whether you're looking at a Dow, if it holds this, do not be surprised to see it unwind and move all the way back up into yesterday's highs. The ideal situation into opening flows here is that it stays stuck inside this range. As we go into New York Open, Cash Open, you get a headline and it goes, pukes back below those lows, right? Looks a little bit heavy. Everybody starts to panic. And then you get a positive close like this. And that's a very high odds long for a move back into there and try and rip, especially if we get a headline, okay? It's a little bit longer than usual. I thought this was interesting. Let's see what we get. Let me know if you enjoyed the video. All the best, guys. Talk to you guys soon. Bye-bye.